Welcome to the Payment Strategy Show. I'm Becky Kopplin, VP of Payments at Rainforest. We help software platforms embed payment processing into their core product to grow revenue and improve customer retention. I am so excited to be here today with Ashley Willson. Ashley is co-founder of Revolv, where she partners with vertical software companies to accelerate revenue, improve customer experience, and maximize payment monetization through strategic distribution. Ashley, thank you so much for being on the show.
I'm so happy to be here. Thank you for having me. We've worked together for so many years. I'm so excited to have this conversation with you today.
Yeah, same. And I was just going to bring that up. I love that people get to hear a little bit inside of the chats we have offline.
Absolutely.
I have this theory, and I've brought it up a few different times on the show, that nobody gets into payments on purpose. And once you're here, you can't leave. And so I always like to start with your payments origin story and see if you can prove out my theory or be the one exception. But tell me and everyone else kind of, how did you get into payments?
Yeah. So I think I have a little bit of a unique background into payments, but I will say I still fell into it. And if you asked me many years ago if this is what I'd be doing today, I would not have told you this is at all what I would be doing. But I started my career kind of in financial operations and was really trying to figure out what I wanted to do and had an opportunity to consult for a family business. So one of my family members had called me and they said, I have this company. Will you come look at it? I just need a more operational minded person. And they were really just an old school agent office. They were reselling like 15 different products from payments to lending to ATM processing and everything you could touch around kind of what we now would call like legacy payments and legacy fintech.
Is this all the old school, like leasing terminals and trans 380s? And like, is that how far back we go with this story?
We're going back to like first static night agent offices. We're
Yes.
going way back to no ownership over the relationship, just a small rev share, first right of refusals and agreements, and, really just a reseller. So it's kind of a sales office in
Yeah.
its most simple form. And when I got in there, there was all of these like 15 different products, and I got fascinated by merchant acquiring and ATMs. And I think a conversation we have a lot today with a lot of our partners is, do you want to take on risk? And that was very much the conversation that I had back in 2010. I think my first time coming in and consulting for the company was like in 08, 09. We decided at the time, let's go full in on these two products. These two products were doing well. Our teams were selling them well. And so stood up a old school wholesale ISO on the ATM and the credit card side. And had many agent offices and went out there and kind of, dominated selling terminals and sometimes what felt like out of the back of my car. And so over time, I think where software started to come into this and started to become such a level of interest for me and like, where is the other side of this? Where's payments heading is two big things. We had Square and Stripe were coming into the market. And we were seeing a lot of our customers make the transition there, no minimum fees. The other part of it was we also had some route management that we were doing in unattended. And as you naturally start to build that business, I got to learn about the software side of the house. And so went through the decision myself on whether or not to become a PayFac. That happened to align right around the time we actually decided to exit the business in 2017. Being really excited about that software side and some of the verticalization we were seeing, I went and spent some time actually helping to stand up payment facilitators, then working in one of my roles to become a payment facilitator ourselves to serve software companies in the embedded payment space, followed by actually standing up an acquirer processor in the US and Canada. And so while I loved all of that, I think the one thing I always felt I really did in all of those roles was took a very consultative role with clients and spent a lot of time with them solving the challenges and how to grow payments and bring payments into their product. And so when I stepped away from that role 2 years ago, I had the opportunity to go do some consulting and thought, this will be temporary. I'll go consult with some SaaS companies. I'll figure out what the problem to be solved is here. And then I'll figure out what my next big, undertaking is in this space. But I knew I wasn't going to leave payments and I knew I still wanted to stay in. And sure enough, I figured out that part of the problem to be solved was that. They just needed help. A lot of companies were very early in their payment strategy. They had maybe selected the wrong provider. They were having problems with adoption. And so went out and launched Revolv about a year ago, very much with that goal of coming into these SaaS companies and talking about more than just vendor selection, and some of the cost savings conversations that were happening, but really getting into go to market strategy with the teams, looking at the product and user experience and helping them to think about how to scale that.
I love that. And it aligns so much with my own. You kind of accidentally start working for an ISO and then you find yourself as a consultant. Like I feel like that's such a natural part of it. And then you think it's temporary, right? And then you find that there's so much need there. A lot of consultants, they focus on like, and you mentioned this vendor selection or provider selection, contract negotiation, shaving BIPs, RFPs, but you guys didn't decide to do that. You're really specializing in the go to market strategy, driving payment adoptions. Why focus there?
Yeah, so we really did. If you look at even my trajectory into payments, I think it's a lot of the embedded payment space and what we see has happened over time. And first we needed to solve how do these companies work with the processor? And so we solved that through orchestration. Then we needed to solve how do they actually manage the user experience? And a huge component of that was settlement. And so payment facilitation took on this darling name across the industry and got a ton of time and attention. And then we had to figure out how they manage risk. Once we all kind of figured out not everybody needed to be a payment facilitator, which I know Rainforest has obviously figured this out with a managed payback solution. We then needed to figure out how were we going to get these solutions into customers' hands and how we were going to help them integrate quickly. Then once we got past quick integration, I think a lot of us realized then we had to solve for the back office. There's all these people in operations, in support that needed to manage payments. And how are we actually going to get them the tools that they needed to support the customers? We've given them all the tools to own the customer experience. How are we actually getting them the tools to support it? And what I kind of felt like the last milestone was, and where most of the conversations I personally was having on a day to day basis with a lot of our platform clients that I had signed, was they'd gotten integration done in weeks or they had accelerated time to market, but they really weren't seeing the adoption that they expected. And I felt it was so challenging to solve that sitting within a payments company. As much as I wanted to be consultative, as much as I wanted to help many of these founders and GM of payments and helping them with the adoption problem and how do you think about selling payments and where do you set your fees at? Because if you set them wrong in the first place, you can't go back and fix it later. How do you overcome those challenges? I felt like there was just a lack of go to market support that a processing partner could really offer through an agnostic view. And so in doing that, I also recognized as a generalist, my subject matter expertise, despite running sales and revenue for the last how many years of my career, wasn't always sales. And so finding someone who had been through this journey of embedding payments into a SaaS company who had understood payments really well, but understood it through the lens of that software provider and how to really deploy it was important. And so went out and identified my amazing co-founder, Allie, and we went out and launched this because we were both trying to solve that same problem. There is an adoption need that is not being addressed and is really challenging to address from within your provider, but also helping our companies kind of overcome that transition from is it a provider or is it a partner that they're working with?
And that's an interesting distinction you bring up because I think most people would use these phrases interchangeably partner, vendor, processor, provider. And you kind of bring up kind of vendor and partner being two unique things. Can you say more about how those things are unique in your mind?
I think vendor and partner are two totally different words. They have very different meanings. A vendor to me is somebody who is solving a singular need within an organization, right? And so traditional payments, we go back to the ISO days, you were solving the singular need of we need the ability to turn on payments,
Yeah, facilitate a payment.
right? And
Yeah.
that's it. Make sure I get paid on time, facilitate this payment. I don't need anything other than that. A partner, when you get into embedded payments, is a huge part of your customer experience. You can't take on payments in an embedded way, have it be a component of your product, and not think of the customer journey from the first time that your customer signs up to payments all the way through to how many ways they have to pay and what their users' experiences are to settlement. All of that is fully embedded. And so you need a partner whose strategy aligns with your strategy. You need a partner who is offering the features that you need to unlock that revenue and to unlock those clients and serve them well. And so you're no longer having this conversation with your processing partner around a couple of cents of costs or how can they reduce your processing cost. You're now having these much bigger feature conversations around how do we enhance adoption together and are our strategies aligned?
When I first got into consulting, and I'm interested because you've talked about this dynamic a little bit already so far, but when I first got into it, there was a whole lot of like, help me reduce my costs. Software platforms or investors would come to me and like, hey, we're go renegotiate this contract. We're paying too much in fees. And there's always kind of this dynamic between trying to get them from, I need to save 2 basis points for my processing costs to, it's much more impactful is move from 40 to 60% adoption or move to 90% adoption at point of sale for net new or, whatever these numbers were and walking them through the math of how much more important volume is over the couple basis points in costs. How do you get software platforms to recognize the value of this go to market over go help me, save 2 basis points? Because I think that when you think about vendor and partner, right, a partner really is that your, right hand and going to get that volume, right?
Yeah.
Somebody who's aligned with you. And a vendor is like, I don't want to pay 20 cents, I want to pay 18 cents. That feels aligned to me. So how do you have that conversation with software
Yeah.
platforms?
It's interesting as you say that too. I think a good way to look at it too is that a partner is owned in a completely different part of the organization. When you look at a vendor, it's operations.
Okay.
And when you look at a partner, it's really something that's typically owned more by product and revenue or a GM of payment that's kind of sitting, at a P&L executive level. But you're absolutely right. Every engagement starts with a different problem to be solved. I will say nobody is calling a consultant because everything is going really well.
Of course, right.
And oftentimes, that thing that is not going well is I had another bad board meeting and we're not seeing the revenue. And so, a lot of the times, it's we need to find a processor that gives us more share of wallet and more share of the processing revenue. And when you start to get down to it, when you can help a software company see that their margins are fairly well protected over some of the compression we are seeing in this space. If you go sit at a traditional processor, we're seeing a lot of compression. We're seeing processor expanding out into new added value, embedded financial services, some out of necessity, some to kind of follow their clients' roadmaps. But payments historically goes through these very quick compression cycles, and the processor is not making the lion's share of the money. So it starts with education with data and showing them where some of their costs are actually coming from. Sometimes there's some optimization work to do there, but that doesn't always come from the processor. Sometimes it's partnering with your processor on different ways to move a transaction or to pass additional information from an interchange perspective. But you can get to those numbers very quickly and say, sure, I can save you another 2% of cost, right? But if we sit down and we look at the go to market side of the house, you are missing these two or three key features. Customers are not selecting you for payments 90% of the time because you advertise a bring your own gateway provider solution and bring your own payments, or you don't have this core feature functionality being maybe even something like card present or tap to pay that is really critical for them to have. And then you start to go into those numbers and kind of highlight the margin that they are seeing on each one of these transactions. But it's not always an easy conversation. It's not always simple. And not every client's a good client for what we're focused on. But I'm seeing more and more these kind of CEOs, platform companies coming and saying, we need to focus on how to increase adoption. Only 10% of our clients are using payments. What are some ways that we can increase that? And what are some of the ways that we can pull our back book forward or consolidate providers if they're seeing gaps in the user experience?
Yeah, I think that's right. And we're definitely seeing that trend too. But I think there's still a big chunk of folks out there that are thinking, if I can just push my vendor specifically for a couple extra pennies, that's going to make a difference. It's fine. You save a couple pennies, but that's not really what's going to move the needle.
It's not going to create the stickiness either. Some of it is let's go look at adoption. The other conversations, let's look at attrition. How much time are you spending selling into these clients and then seeing them roll off? Are you focused on the wrong thing by just looking at the cost?
Right, right. If we were to take even a further step back, thinking about the success opportunity that platforms have, to monetize payments and really kind of those folks that come out on top. Even before you add payments to this scenario, what are the predictors in your mind? I think you and I both kind of have a good gut. Like you get on the phone, you look at a platform and you go, okay, these guys are going to win in this space. Or alternatively, like we can get there, but this is going to be a little work. What are those predictors in your mind? Not payment feature functionality, not go to market, just software that gives a good indicator that payments is a good fit and is going to be a winner.
Yeah. I think this actually goes back to the last comment we were just having around cost. One of the ways of helping a client get to the outcomes is talking through that value proposition. Why are your customers looking to use you for payments? What is the need for it? Do you have a demand for it? Interesting enough, you don't actually get an answer a lot of the times. And it's really interesting to watch people go back and think about why. If I stop thinking about the revenue outcomes I keep hearing from my investor, or I listen to podcasts and someone said I can make a lot of money on payments, or hey, I heard about Toast and Uber and how they're payments companies now. When you get past what people have heard about payments and why they think they should be doing it, and you start to get to the root cause of why a customer actually wants this solution from them and what the value prop is, you oftentimes flush out very quickly if there is an opportunity or not. And it's so fascinating to hear it. One of the other indicators I see is I don't think all merchants are created equally. When you look at a SMB, an SMB is very much going to leverage one or two systems to run their everyday business. They are solving complex problems, but in a very different way and with less products. When you go and step into a company that serves an enterprise customer, those are typically the ones where I take a bit of a step back and say, is there an opportunity to actually disrupt their current ERP system or integrate in their ERP system in a way that is going to be economically feasible, is going to offer the features they need, but more importantly, is going to give them the reconciliation and the outcomes that they're looking for? Or are we just adding more friction to an already complex? The ones that I like are the ones that have a lot of check processing, but it's really coming into some companies early in their strategy. They have a massive back book of opportunity. The value prop is very clear. They may not do payments today, but they may have a couple billion in processing going through their platform. And so you're kind of clawing back some of these bring your own models and offering more embedded feature functionalities. Those are a little bit more challenging to see just from the website. But I think there's an easier move away when you have a bring your own payments. There's clearly a need for payments in the product. Now it's just pulling that forward.
Yeah, we describe that in kind of the right to win the transaction, and the closer you are to that transaction flow today, the easier that's going to be. And obviously, there's nuances to that, but I had a client call once and they're like, there's so much opportunity, right? Billions of dollars, TAM, blah, blah, blah. And then found out they only do scheduling, but there's no invoice component. And they weren't even at invoicing. And so we're like, okay, yes, but you're like 2 or 3 product features away from even thinking about this. And so it was at that step one versus that kind of BYO model, which you're right, has already proven out the need. And now you're just going to optimize and look at a migration of sorts. When you think about that scenario, right, you're coming in, you see an opportunity. Where in this process do they need the most support, these SaaS platforms? They're like, we've recognized the opportunity, we've convinced them it's volume, they know they need help, they're engaged listening. Where do you go, okay, this is where we're going to focus?
Where I see companies needing the most support is fleshing out the strategy, right? And where to start is different for every company. Sometimes it's pulling on the thread and selecting a provider. So we may pull them through that RFP process, identify a provider that they can start with today that really fits into their longer term journey. Sometimes it may be realigning some of the internal resources that they're working with, making sure that they have the right people internally overseeing the product development. Some cases that's putting a GM of payments in role and working alongside them to execute on the strategy. I guess my point here is there is no exact starting point. Every client has something different. We're either going through the initial vendor assessment, or a lot of the times we're going through the product journey, the customer journey, and we're helping them work with their current provider to understand if there is additional features that they can pull in. Before you can do any of that, you have to understand the numbers. Do they have any adoption? How much processing is going through third-party gateways today? What are the outcomes that we want to get to? And sometimes just getting to the outcomes helps to suddenly align everybody. I think it's so interesting sometimes how the outcome might be we want to save more money on payments. And by the time we get done working through that kind of assessment and recommendation, the outcome is we want to increase adoption by 20%. And we want to eliminate 4 out of our 5 gateways that we're supporting today and focus on bringing those folks into like our mandatory payment strategy or mandatory payments product.
Yeah, starting with the why, starting with the strategy and helping them to understand what that looks like. That makes a ton of sense. What do you think, like, the biggest mistakes that vertical SaaS platforms make when launching and growing payments? Like, where do they frequently go wrong?
Focus on cost first.
Yeah, obviously.
I think a lot of it is actually coming to listen, cost is important, right?
Yeah.
It's not something that and I joke about that, but it's kind of everything that we talked about today. A lot of companies go into it with a we're going to try this out. And I am a big believer on being extremely curious and pulling on the thread and flushing out what the outcomes could be. And so sometimes folks just come and they're like, we're just going to start here. We're going to select a partner. We know so and so that works there. We have a good relationship. The CEO and, the CEO of that company have worked together before, but the provider or the vendor that they might be looking at is only serving B2B2B. They're only serving platforms that serve businesses and they
Yeah.
have a platform that serves consumers. And they may be the first vertical in the medical space that that platform has ever supported. And there's no verticalization or no vertical knowledge within the payment
Mhm.
provider. And so now they're sitting there with this provider who doesn't understand who the actual payee or the cardholder is.
Right.
They really don't understand their vertical and they may not know some of the nuanced network rules. They may not know some of the kind of nuanced cardholder behavior or merchant behavior and have the tools in place to do that. And so now they're really struggling to grow and scale because maybe they went with the cheapest proposal or they went with so and so that they knew from a company before or an investor told them to use them, but there's no alignment in roadmap. And
Right.
so these companies don't have that opportunity to partner and grow together. And no matter how many times the payment provider comes in and throws all the resources and people and support at the problem, you can't make the roadmap align. You can't build fast enough. You can't solve for that unless it is a strategic vertical that that payment provider is really actively looking to get into and has started to build for.
Right. Being aligned with your processor.
Yeah. And it's interesting, right? And just we're hearing this from investors a lot as well in boards. This is actually where they're looking for the most support is on vendor selection. And sometimes we'll come in and vendor selection is the ask and the outcome is actually to adjust and correct things with a current vendor or
Okay.
maybe even reallocate within the right team within the current vendor. But if you don't have that alignment, the long-term needs are not going to be there. Margins are healthy for software companies on payments, but they're still going to want to later adopt financial services. And if a company serves businesses as payees and not consumers, they're never going to have a consumer lending product for you. It's so much different to build a consumer lending product over a business lending product or a capital management product. They're fundamentally different businesses when you start to get into the financial side of things.
Yeah. Yeah. In cases where you see people out there just crushing it, payments is a huge part of their revenue. They went out there, they have a great vendor, one that's aligned, a partner, maybe to reuse the right vocabulary. What are they doing right? Like, what's driving that success?
They've aligned people, product, and profit, right? I mean, they've put the right people in seat. Most of the time, there is a GM of payments who is owning this internally. Sometimes we even work alongside those GM of payments occasionally if it's an expansion into a new product. We're oftentimes helping clients put that person in role, but they acknowledge that somebody needs to have a entrepreneurial background or entrepreneurial spirit. They need to be more of a generalist, but they need to have deep knowledge in payments. And they need to be able to sit across and work across the organization, whether it's fully owning the P&L or being adjacent, because many of these teams, like sales and product, then have a dotted line into this person. So people who have really focused on putting the right owner in place to kind of evangelize payments throughout the organization and create alignment and help forecast potential risks and price for risk accordingly. That's really critical. The second part is profit. They understand what they want their outcomes to be. A lot of times companies will come in and say, we're going to give payments away. We think it's sticky. And so we want to keep clients on us and we want to give them a sticky experience. It becomes more cost prohibitive. It's expensive to run payments. You need to have a margin component on it. It is very hard to undo that. If you make the wrong pricing decisions in the beginning, it's very hard to go back and increase your price.
You can decrease prices. Increasing is challenging. Yeah, we always
Yep.
recommend gonna go in a little higher or a whole lot higher than you think you might be and learn that way, but not the opposite.
Absolutely. If you get lucky, then you have a successful go-to-market strategy with these prices and you can reduce over time to help retain. And then the third part is really that product. They've picked the right partner. They understand the impact it has on product. They've really drawn on that value proposition and said, hey, we're going to dedicate resources to making sure we embed these features in the things that we need.
Yeah, yeah, that sounds right, and that's what we've seen as well. Looking forward a little bit, you've mentioned the financial products and some other things, but what are trends that you're seeing that are gonna be impactful for vertical software companies? Any predictions you wanna throw out there looking ahead about what this is gonna look like?
I really do think there is going to be a huge opportunity to unlock card issuing products, to unlock lending. For example, a client in the education space, and there's such a natural opportunity for them not to take a risk on of offering term payments and for them to then go and do a buy now, pay later or a consumer lending product where they're actually offering kind of term loans. I think where we're going to see the most change in this space is we're going to continue to see vertical focus from providers. They're going to really hunker down on getting vertical specific, getting deep in those verticals so that they can unlock those financial services. It's much more challenging. I think merchant acquiring, while it is extremely complex and it's not an easy space, it may seem easier for us who have spent so much time in it at times. It's not. It's a very compliant heavy industry. So are some of these other features. So I think we're going to see more vertical focus from the providers. And then and I think you probably share this excitement with me, but I'm excited about some of the greenfield space that's out there. I think there is a lot of disruption in continuing to see the trend towards digitalization. I don't think we
Mhm.
realize how much of that is still going on.
Yeah.
I actually had dinner with a family friend was in town and we went out to dinner with her father last night. And he actually told me, well, I can't go on vacation because the auto leasing company, like finance department that he runs for an auto company that manages lease, he's like, it's tough because checks come in and people's payments need to be processed.
And
And
you're
I
like,
said,
"What year is it? Is it like 1995?
what do
Like, I
you
don't know what's
mean?
happening."
I'm like, they're mailing them to you? Let's talk about lockbox services. Let's talk about different platforms that out there, right? So I think that we live in this like forefront of payments and the digitalization on a day-to-day basis. We oftentimes forget that there is so much out there that is still very much going through traditional checks and cash and some of the more legacy forms of payment. So I think we're just going to continue to see that grow in some of these greenfield, more so kind of B2B.
Yeah, that's what came to mind for me is the B2B2B, but then after that, you think like bill pay, utilities, insurance, car payment, a lot of that still is check-based. Anything else come to mind for industries for you that sit top of that emerging market? B2B always sits at the top for me because it's still so much check heavy, but
I mean, I think about like construction and services, getting
yeah,
things done around your house or construction in general, paying out contractors and how all of that is still very legacy and the lack of visibility even to the homeowner on how payments are being distributed, maybe through their general contractor. So those are definitely some of the areas that we're focused on.
yeah, yeah. I think we kept a checkbook around a couple years longer than we might have otherwise for those kind of like household services types of things. You're like, "Can I pay with a card?" You're like, "No." You're like, Okay." You're the only reason I have a checkbook, so just gonna point that out.
You're like, am I buying a house? Okay, I need to go get like temporary checks. And that's like about the only use case I keep a checkbook around for now.
Yeah, yeah, it's wild. Okay, last question. If you could give SaaS leaders just kind of one piece of advice about driving payment adoptions, what would it be?
Payments is not a like tertiary part of your product. It can have an extremely positive or negative impact on your customer experience. And so think about it in that way, you can easily crawl, walk, run into payments and reduce risk if you understand what the risk is with the right partner. So I think, Rainforest does this. I'm sure there's many other out there that can offer a way to start with payments without taking on everything day one and growing into that. You don't need to partner jump to do that. You just need to think a couple years out and make sure you're selecting the right partner.
Great advice.
And make sure you have an owner. Like, that's the other thing. Like, somebody within the organization has to own this and make sure they've got some experience in payments because risk is okay, right? I think Jamie Dimon said it best, like risk is okay if you can price for it and you can foresee the outcomes of it. But there is so much that can be missed if you do not have the right person in role and making sure that you are really managing the negative outcomes is important.
Great advice. And really, it's been a fantastic time that we've had together. And I appreciate so much you joining us today.
Yeah, it's great. Thank you so much.